Managing your personal finances well. Key to building wealth. Do you know what the thing is about personal finances? Everyone talks about it. Everyone knows that they should be saving more and spending less money. And yet, we all seem to struggle with managing our own finances. Maybe because it is not taught in school, but it should be. Money management is not just knowing how much you earn and spend. It's about knowing where your money comes from and where it flows. It's about planning so that you can work yourself out of financial troubles when they arise. And it's about discovering your purpose so you don't lose sight of what is essential in life. Hi, and welcome back to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. In this video, I'll touch upon some of the things you should do if you want to move your finances from zero to hero and discuss the basics of personal finance and how they can apply to you in building wealth. But before that, make sure to like this video, subscribe, and click on the notification bell to stay updated with our videos. Now let's get to the video proper. Just what is it when we talk about managing your personal finances? Money management, including savings and investments, falls under the umbrella phrase of personal finance. Budgeting, healthcare insurance, investing, taxes, loans, and planning for retirement are also part of this category. Financial planning is all about reaching your own short-term, intermediate-term, and long-term monetary objectives. Having a firm grasp of one's current economic situation and how one might maximize prospective economic security is key to effective personal financial management. This means taking charge of your current economic circumstances so you can better manage your day-to-day expenditures to correspond with your goals and aspirations in life. The following describes the value of financial planning and why it matters. First is financial stability. These are some of the issues you should address. What would you do if you lost your job tomorrow? And until when do you have to start looking for a new job? Having a savings buffer might be invaluable in case of an unexpected expense. Second, prospects for investing. Earning more money now won't stop your expenses from rising. Gaining proficiency in financial management will put you in a position to make the most of investments. Investing well is something you can study. Making smart investments now will enable you to fulfill your future needs quickly. You risk running out of money before you've had a chance to get your finances under control. If you can't afford to take care of yourself now, how would you expect to have spare cash to put toward your future? Third, higher quality of life. Satisfied with the way you live now? You and your family members deserve a higher quality of life going forward. You'd like to buy a house? Or probably improve the one you now live in. You're hoping to take a trip far away from home with your friends and family. The only way to achieve all of this is by saving and investing as much of your current income as possible. Fourth, the safety of your loved ones. There is no escaping the fact that adulthood brings a whole new set of obligations. Planning for your kids' future education is essential to you. To ensure your family's safety, you're looking into various insurance options and other potential remedies. Making preparations for your loved one's safety should be a top priority when it comes to managing your finances. Fifth, responsible credit card use is essential. These days, we can't imagine managing our finances without using credit and debit cards. Nowadays, it's unthinkable to live without one. Credit cards make it easy to settle transactions. However, they could quickly spiral out of control and leave you drowning in debt. It will help if you clear up your monthly debt in full to avoid interest charges. If you can't avoid using credit, use as little of it as possible. That implies your balance shouldn't be more than 30% of your overall credit limit at any time. Sixth, take a look at your credit score. Always remember to check your credit score. A credit score, a 3-digit figure, may have a significant impact on your financial life. If your rating is good, financial organizations will be more willing to extend favorable loan conditions, including reduced interest rates. If you're applying for sizable debts like a mortgage, A solid credit score is crucial. Finding a mortgage with a low interest rate may help you save a lot of money over the course of the loan. If you want a better credit score, try these strategies. 1. Request a copy of your credit history and review it for inaccuracies. 2. Sign up for a credit monitoring program to keep mistakes from happening again. 3. Maintain a low credit usage ratio by paying payments on schedule. Among the quickest ways to plummet your credit score is to settle your payments late. Lastly, 7. Improved financial knowledge and skills. Financial planning's main advantage is that it encourages you to learn more advanced concepts in money management. In order to get started with budgeting and future planning, you should seek the help of financial experts. Your financial knowledge will grow as you prepare meticulously and collaborate directly with all these consultants. If you want to succeed financially, you need to surround yourself with reliable experts. People that deserve your trust as advisors will be open and generous with their expertise. Your ability to make independent investing judgments may increase as time progresses. Seeing as you understand why taking charge of your financial situation is essential, it's time to get educated on some effective techniques for doing so. Here are the ways to keep your finances in order. Set a budget. Without a plan in place, it's easier to waste a lot of cash on things that aren't necessary. Spending more money than you have per month is a sure way to ruin your finances and make you feel down. Creating an accurate budget can help you succeed. Prepare a plan for how you will spend your funds. You should set aside some of your monthly earnings to save for retirement or other long-term objectives in addition to paying the bills and living costs. Find the method of financial planning that works best for you. Numerous applications that help consumers manage their finances on the go have just been developed by smartphones. As an alternative, you may use spreadsheets. Find out what options are available and which alternatives will work best for your needs. A budgeting strategy called 50-30-20 was proposed by one style of thinking. Here's how the procedure breaks down. Divide your gross revenue in half and use that sum to pay for your rental payment, food, utilities, and transportation. Budget 30% for fun stuff like clothes, travel, entertainment, and donations, if you like. 20% should go into long-term objectives including savings, investments, and retirement. It makes no difference how complicated everything has become for you. Never let the fact that you're late get in the way of your determination. Today is the time to sit down and write up your budget. Have the appropriate bank accounts. Another key to effective money management is maintaining a system of separate banking accounts. The ability to open various financial accounts, including checking, savings, and investments, is provided. You might think of them as the cornerstones of your future economic stability. Your daily spending income must be kept in a checking account. Your checking account is not a safe place for your savings. Your money should be held in a bank account solely for that reason. If you don't have a system to prevent impulse buys from draining your cash, you risk doing just that. Don't forget to put money into your investments accounts and stick with it regularly. Set aside money in case of an emergency. Unpredicted costs are something that can't be avoided in life. Imagine if you weren't ready for it. Nobody wishes for bad things to happen. However, as long as we are here, something will happen that we can't prevent. Put some cash away if anything unforeseen happens, like losing your job. If you lose your work, the amount in your savings account must last you through a minimum of 6 months. Healthcare costs, extensive renovations to your home, or a costly automobile repair are all examples of out-of-the-ordinary costs that must be accounted for in your emergency fund. Make it a daily habit to record your financial transactions. Every day, you should take a look at your bank balance. A little bit of your time is all that's needed. All you need to do is commit 10 to 15 minutes daily. The most effective method for keeping track of your spending is to save your receipts. Expenses should be recorded in a spreadsheet or the chosen budget tool. As a result, you can detect if your costs begin to spiral out of control. Pay off your bills. Having a substantial debt might slow you down considerably while trying to get your financial situation in order. Find your ongoing bills and tackle the largest ones first. A debt reduction strategy may be necessary if you've accrued a significant amount of debt. Set a realistic goal of having such obligations paid off swiftly, and devote a sizable portion of your salary to that end. Every part may be tackled independently. It's best to begin with the largest and work your way down the list until you've finished. Don't incur additional debt until all your current bills have been paid completely. Consider the following tips to reduce your debts more quickly. First, if your paycheck isn't enough to make regular payments on your loans, you might want to think about taking up a second job. A passive income can help you meet your immediate money needs and put you in a better situation to achieve your long-term financial objectives more quickly. For part-time jobs that can be done from home, people often turn to the internet. Start with affiliate marketing or freelancing. Your side gig may one day provide most of your money. Next, take on more work. Having two income streams will be very helpful in paying off debt. Getting out of debt and gaining financial stability is a priority, so you should do everything it takes to get there. Then, sell some unneeded or unwanted goods sitting around your home. Start listing them on auction websites like eBay. Someone somewhere may be looking for just what you're selling. Lastly, reducing spending in certain areas is recommended. Revisit your financial plan. Flip over the stuff you've written down. It's possible you'll discover that there are certain items you can live without. Remove them or reduce their funding significantly. You may be able to come up with some more funds to help you get out from under your bills more quickly. It appears that we have reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts below about the steps you are currently employing to manage your finances. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you next time.